Very good evening, everyone. This is Rajendran here, joining from Market Calls, and welcome everyone to Trend Reversal Trading Strategies using Market Profile. And I think we had discussed a lot more things about Market Profile, and this time we're going to talk about a specific trend reversal trading strategy called failed auction. That is the core idea behind today's session. So in today's discussion, we're going to discuss about trend reversal strategies using Market Profile, and why Market Profile itself famous for trend reversal strategies. And what is a failed auction? How to trade the failed auction? And of course, the winning percentage of failed auction. And finally, we're going to look into the Nifty and Bank Nifty futures outlook. I hope the audio and video quality is good enough. There's a chat box down there. You can type yes if the audio and video quality is good enough to kickstart. All right. Thank you, Shawan, Pankaj, Amit, Pradeep, Etiraj, and Bhupati and Gajendra, right? And Amit Kumar and everybody. So it's highly recommended to use Chrome browser, and that is what Fabina's platform brings better trading experience and learning experience to the traders. And thank you, Amane, and thank you, Manoj, and thank you, Bhupati, and everyone. All right, so let's quickly discuss about today's topic. A little bit about me. My name is Rajendran. I'm a full-time derivative trader. I primarily trade in Nifty, Bank Nifty, and USDNR F&O instruments. I've been trading since 2006 onwards, and I've been a trading system designer myself, and I consume my own trading systems. I've been trading since systems since 2009 onwards. And post 2012 onwards, I started observing Market Profile and Orderflow. Almost more than a decade now, I've been using Market Profile and Orderflow as one of my primary trading arsenal. So most likely, Market Profile and Orderflow is nothing but a combination. For discretionary trading purpose only, we can use it. We cannot automate everything in Market Profile and Orderflow, but some part of Market Profile and Orderflow can be automated, but you cannot completely automate the principles of Market Profile and Orderflow. I also write in a blog called marketcalls.in. It's my personal blog. I've been writing since 2007 onwards. More than almost last 15 years, I've been writing there about markets, trading software, strategies, automation, Market Profile, Orderflow. And recently, we also started doing with Bookmap as well. We've been trading professional traders at Fabinas.com. Fabinas.com is a portal for professional traders who want to come and learn professional subject like Market Profile, Orderflow, and systematic trading. And also the co-creator of algomojo.com is an algo automated trading terminal as well. Now, can we use Market Profile for trend reversal? See, let me tell you one thing. 80% of the traders in the markets are not trend reversal traders. Most of the time they trade breakouts. Majority of the young traders, they move towards swing trading. Like they want to see the momentum, and the momentum is breaking out the swing, or they are seeing the breakout. People want to predict whether the breakout is successful or not. And that is where the most of the energy is spent by them. Right from beginner level traders or traders who are 1 year, 2 year, 3 year, even up to 5 year, 6 year experience also. Majority of the trader, they focus on only one thing, whether the breakout is successful or not. Many traders, they have that question. Right? However, Market Profile is on the other side. Market Profile, I would say, like it's one of the perfect tool for practicing trend reversal strategies. Trend reversal strategies are not easy, but it is not difficult also if you understand the nuances, techniques behind that. Because majority of the time, market does a two-way auction process. So trend reversal is what happens in the markets most of the time than breakouts. And not only that, Market Profile itself, if you study Market Profile gives a lot of visual clues about most of the time what the traders are doing in the markets. Why I personally use Market Profile is like it helps understand what kind of traders I'm competing with, how emotional traders are. So there are times, a lot more times you'll be seeing emotions in the markets. And I see via market profile. So it'll be very easy to understand where the weaker hands are coming and playing in the markets. So one can go and use the trading tactics against the weaker hands if you know that really weaker hands are there in the system. And market profile leaves a lot of memory spots. A lot of people say like markets do have memory. Yes, of course, that is true. In market profile, we can see those memory spots. Those are mostly references. Some references could be support, some references could be resistance, and many references in market profiles, they are primary targets. So that is what failed auction is also all about. Failed auction is also one sort of a memory point. Market leaves that memory. Those memory spots are created because of the behavior of the traders. Not only weaker hands, but also smart traders also at times leave memory at certain places. Smart traders, weaker hands, everybody, they leave some sort of information, some sort of trail information in the markets. And that is very helpful for short-term traders and intraday traders. See, market profile is not only used for trend reversal. Majority of the trend following strategies, or majority of the trend reversal strategies are from market profile. However, market profile can be used to trade momentum also. There are many places I do trade intraday momentum strategies using market profile. Now, what are the types of trend reversal strategies that we can use in market profile? A lot of strategies are there: failed auction, dual momentum reversal, G2 top reversal, P-shape reversal, double distribution reversal, visual references, short-term reversal, poor low, poor high reversal strategies, ABC flip patterns. Some of them are positional, some of them are intraday, and then RP-POC reversal patterns, AV poor low, poor high reversal patterns, exponential trend reversal patterns, intraday gap up, gap down reversals, emotional spikes, spike traps, emotional big gap up and gap down reversals. I don't want to quote too much, but I thought like whatever comes to my mind, I just post over here. So these are some of the reversal strategies that we had identified over the last decade or so. And we've been time to time, keep on increasing our screen time in understanding the market profile a lot. And we'll try to understand why the reversal is happening, for what reason the reversals are happening. See, one such example is what I'm going to talk about, which is nothing but we're going to talk in detail about failed auction. Particularly, we'll try to understand what is failed auction. See, one thing I'll tell you, first of all, failed auction is not a market profile concept at all. Because market profile has been created by Peter Stadelmayer and Jim Dalton is the one. Mr. Jim Dalton from Alaska, he's the one who took market profile to the next dimension, I would say that. But none of his books you would have studied failed auction. So then then why failed auction is coming into market profile? So the term failed auction itself, a concept coined by Mr. Ray Barros from tradingsuccess.com, right? So he's a fund manager and he used to practice in S&P 500 in US market. He understands that the behavior is very much repetitive and the winning odds are very high. But when it comes to market profile, right, how I see this price action pattern, it's nothing but a simple price action pattern only. How I see this information is like the failed auction is nothing but a one type of excess. It creates during intraday. It creates during intraday, but gives positional trading opportunities. Generally, when I'm looking into failed auction, I will look from the end of the day only. I'll wait for the day to end. I'll wait for the day to confirm that, yes, it is a failed auction. Then I'll try to strategize. Later on, I'll try to strategize how I should play this failed auction. So failed auction is nothing but what? Initial balance breakout failure. See, first of all, before looking into the rules, I'll try to tell you, I'll try to give a pictorial diagram how the IB breakout failure looks like, initial balance breakout failure looks like. I'm sure you guys know about initial balance, right? What is initial balance? You can type it in the chat box. What is initial balance? For the people who are haven't gone through the basics of market profile, I'll give some basics about it. See, market profile, right? The first 1 hour of price action, traditionally they call it as a initial balance. You know, right? Every half an hour a letter gets generated. Letter A gets generated from 9:15 to 9:45. The price action between every half an hour is captured in the form of letters. Right. So I'll show you the actual failed auction as on one of the failed auction is getting created over here. You can see that. Let me split the structure. This is market profile. This day we'll get only one distribution. So market profile, if you closely monitor the price action combined with price distribution, the understanding about the markets, I would say it definitely improves a lot. We will not living in assumptions like FIs are selling, so market will go down, or DIs are buying, so market will go up. That is the kind of impression that we will be mostly doing. Mostly that ends up in a postmortem. Right? Rather living in a postmortem, if I try to understand the context, really. So let me tell you what happened over here. Let me try to tell you what is initial balance is all about. So the initial balance is talking about initial balance here, right? So think about here the letter A, as I said, it's just a half an hour of price action. And letter B is another half an hour of price action. If you combine letter A and B together, right, the highs which is forming in the very first hour. So let me mark a reference over here. We call it as the IB high and IB low. So here is the IB high and here is the IB low. Right. So I'm just marking first 1 hour of price action. On 12th of October in Nifty futures October contract. So let me move on to the highs and low, which is made in the first 1 hour. You know, right? It's nothing but a simple open range level, first 1 hour of open range level. But when it comes to market profile, we don't use the levels alone. We represent the price action in terms of letters. Letters are some softwares that use bricks. So some softwares they use the bricks here. And some softwares they'll be representing in terms of letters. Just give me a second. I'll be back in a minute or so. So what I'm going to do here is I'm going to mark those levels. The first 1 hour high, I'm going to mark it as IB high, which is nothing but the first 1 hour of high. Generally, back in those days, the IB concept is created. It's created by the flow traders. And the first 1 hour high and the first 1 hour low, mostly it is done by the locals. Locals means intraday traders and very, very short-term scalpers. They're the one who creates the intraday range here, right? So the intraday range is created and that 1 hour high and low is what we call as IB high and IB low. Now, when it comes to failed auction, what happens is like one of the letters, think about it, only one letter. Now, each and every letter is called TPOs. You know that. One of the letters, a D period. On 12th of October is breaking down. Notice that it is breaking the IB low. IB low is nothing but the letter A period low is broken down. And it quickly started moving to the opposite side. Right? It breaks down and it started reversing to the other side of IB. And if you notice below the IB levels, how many letters that you've been seeing? Only one letter. Only letter D is the only letter which got traded. Even the letter E period, let me put it in a different color. Letter E period was trying to come down, but it is not able to break the IB low again, and it started keep moving up. And somehow it started moving to the opposite side. That is how the price action happened. So ideally, the failed auction is what? The failed auction is very clearly a simple price action technique, but it leaves, as I said, it leaves a memory trail. So the rules of failed auction goes like this. Identifying the failed auction is the most important key in spotting the trend reversal. So we know that failed auction is nothing but an initial balance breakout failure. It breaks, but it doesn't succeed. Rather, it quickly reverses very fairly quickly. Hardly doesn't. It doesn't even hold for 5 to 10 minutes. Not more than 5 to 10 minutes. Price breaks down 5 to 10 minutes. Price started reversing to the opposite side. Now, if you ask me what is the occurrence of failed auction in a month, technically what you can experience. Maybe some month it can be 3 or 4 also. Very rarely it can go up to 4. At least 1 or 2 failed auction you might be experiencing every month on month basis. So the price breaks out of IB high or IB low. It can be price can be breaking the IB high or price can be breaking the IB low, but it very fairly quickly reverses in the same period. And none of the other letter should come and trade below the IB high, or none of the same letters should come and trade above the IB low. And price moves to the opposite side of the IB. If IB high is broken, then IB low will be tested. Or if IB low is broken, then IB high will be tested very fairly quickly. So what is the importance here? The importance here is like it leaves a memory around the failed auction high or the failed auction low. Now let me tell you very clearly, last Friday in Nifty, not Friday though, but I think 12th of October, just 1 day before the expiry. Just 1 day before the expiry. So I want you to understand the context here. I'll tell you the context. The context is very simple. If I see the letters, you see the letters, each and every letter has a size. The size what we are using is a 2-point TPO. Means every 2 point a letter will be plotted. So price breaks down the IB, it becomes like a breakout failure. Price went to the opposite side. Now what Ray Barras is saying here is, Ray Barras says, this auction is an incomplete auction. So what do I mean by an incomplete auction? This auction is called as an incomplete auction. So first of all, what is auction? Because of the buyers and sellers activity, market will be either keep going up or market activity will be keep started coming down. Right, so that is what it's considered. The transactions which is happening because of that price fluctuation is happening. That is what it is considered as an auction. Right, so what Ray Barras is saying is like it is more of an incomplete auction. Incomplete auction. So what does this incomplete auction means is like markets are leaving. Market holds a memory, and this level. This is failed auction. It's happening at the low of the bar. So we call it as a failed auction low. I'll generally call it as a failed auction low. Or some softwares like Bell TPO, they'll be plotting like a failed auction sell. I'll call this like a failed auction low. Now this low will be a potential target in the next T+5 trading session. This low is a potential target, positional target, particularly positional target in the next T+5 trading session within the next 5 days. So that is what we call as a T+5. T+5 days means within 5 days, price will once again come back and catch those levels. Now, what does it means is like, now price can start going up over here. How much ever higher it goes, within price will come back and touch those levels. Exactly, precisely. So it's one form of a context. It uses to build the context over here. Why price has to come and touch those levels? What Ray Barras is saying here is, See, prices all of a sudden it is reversing. The auction was down on 12th of October. All of a sudden, auction is very quickly it is reversing. So that is how it creates an incomplete auction. That very far quickly reversal is what creates an incomplete auction. Such kind of auction always has to get completed. So price leaves a memory over here. Price once again come back and clear those level. I've been observing failed auction for almost a decade now. I've been looking into failed auctions. I would say like the win rate is like as close as like 75%. Now, the very next day itself, price opened lower on the expiry day. In fact, if you know the context, failed auction is one of the potential target. If you know the simple failed auction information, but the information here is like not necessarily the next day itself. It has to come back and clear. Some days it will clear the next day itself. Some days will take 1 or 2, 3 days time to come back and clear it. Right. So every time it's going to be a different game. So we know that now failed auction will get revisited within T+5 trading sessions. So whenever the price action pattern is formed, end of the day, you know that the price action is nothing but what? A simple price action. But it is better if you notice the information from the market profile. I'll tell you why I'm saying so. I'm saying so because it is not only failed auction on 12th of October, it is also a weaker high also. If you see here, you may not notice in candlesticks, very few people might notice over here, but I can tell you the low which happened at letter D period. Letter D period means a 9:15 to 9:45, letter A period will happen. 9:45 to 10:15, letter B period will happen. 10:15 to 10:45, letter C period will happen. And D period will happen from 10:45 to 11:15. The D period low, price kept on falling on that day. See, you understand the context here because I'm trying to explain the context. Price keeps on falling. It keeps on falling and falling and falling. Price was falling very faster, but price stopped exactly at the 11th October low, and it started reversing exactly from there. Now, whom do you think, what kind of traders, they come and compete over here? See, not one trader is going to compete at that single point. Many traders are going to come and compete at that level. So what kind of traders do you think who will come and compete exactly at that level? Somebody is waiting to buy at those levels. Exactly. It is not just only failed auction. Probably failed auction I could have been since maybe during the end of the day. Only end of the day, only I can understand that, yes, the breakout failure is now sustaining like a failed auction. It's a different opportunity altogether. But during the live markets, I was seeing the information, price was falling exactly to that point and it is reversing back. And the reversal was very fast. So that is what we call as a fast tempo. Tempo is one thing we always practice in market profile. One of the part of the observation is understanding how the tempo for the day is. It's more of a fast tempo for that day. So when a faster tempo is happening, faster down move followed by a faster up move, what kind of traders we do compete? That tells a lot more about what kind of emotions are running in, what traders we are competing with. Am I competing with the smart money or am I competing with the weaker hand? I would tell that from an intraday perspective, they are smart money. We call them as dominant buyers. They're dominant buyers, so intraday perspective, they're quite smart. Sometimes they'll be smart for 1 or 2, 3 days also. Dominant buyers. They're also traders only. They are traders. They are the one who is dominating. They're not investors. They are traders. Now, what these people, they do is like when prices started moving from those levels, at some point in time, they'll start booking profits. They'll keep on booking profits. So who will get stuck? Whoever seeing the price action and they try to continue in the same direction, majority of the time, they get stuck in that place. So you can go and join with the dominant traders, but not for a longer period. See, the game in market profile is not only understanding where the smart money is. Of course, dominant buyers are smart traders. But how long they are smart? None of the books talks about that. Market profile talks about that. If you understand market profile, you know, I mean, you can experience yourself that how long the smart money remains like a smart money. So I know that if I combine the market profile information, I'm combining the failed auction information. I'm not only looking into the failed auction information, I'm always looking into the surrounding information. So what are the surrounding information over here? The dominant buyers who showed up on 12th of October, exactly at that particular level, it leaves more memory in the system. It says like the chances of price revising faster odds, that is even more increased. So within 1 or 2 days, I'm expecting that price will come back and touch. I'm not here expecting 5 days. Generally 5 days. 5 days is a common thing. 75% of the time, price will come back and revisit failed auction most of the times. But if you have the combination of information, the combination of the information is what make you from a regular normal trader to the professional trader. But this combination of the information is what it helps you to anticipate things faster. If you're able to combine those information, the idea that your thinking ability about the markets, where the price could move and why it should move, will get clearer and also faster also. So that is with failed auction. Of course, here is a very simple failed auction example. Here, when the price is revisiting, what we do say is like the price is revisiting those levels. What does the revisit means? Price will come back and touch those levels and clear those levels. That is the terminology generally we'll be using. Our price is probing that level. Price is coming and clearing those levels. Price is coming and revisiting those levels. So these are very frequently used terminologies in market profile. Precisely, price will come back and touch those levels, right? So how to trade failed auction? So I'll tell you when the failed auction is happening, right? Let's say one of the day we are having this low, I'm considering as a failed auction. So next day itself, price can come and revisit. Let's say, so this is a level I'm monitoring. Price can immediately come back and touch, or price can go for a couple of days, 2-3 days, it can come back, go back, and they can come down within 2 days, they can come back and touch. They can take 5 days also, they come back and touch. So sometimes the trading opportunity will be very small. For example, price does only failed auction with some more references. So it could clear faster. The opportunity is small. Sometimes price opens next day, gap up, and from there they'll slowly start coming down. Again, they'll start slowly coming down, and finally they'll come back down. Sometimes the opportunity will be medium. Sometimes the market will throw very big opportunity also. At times the opportunity in Nifty and Bank Nifty, for example, Bank Nifty could be like 500,000 points. Such kind of opportunity also comes once in a while. Not very frequently, but once in a while, we do see big opportunities. Something like the market opens a gap up and it starts moving up. Again, another gap up, it starts moving up. And another gap up, and then straight crash to the failed auction. So these are very big opportunities. Sometimes the failed auctions are little difficult to trade also, but the win rate always remains the same, 75% win rate of price coming back and revisiting those levels. Price coming and touching those levels. So I had classified into different categories, depends upon the trading opportunity. When very big trading opportunity is coming there, I consider trading with the hedged futures because maximum potential can be gauged there, or one of the places where one should trade with an out of the money option. So it depends upon how bigger the opportunity it is, one should decide which strike price one should trade. Now, I'm not going to go deeper into that, but I'm sure if you're an option trader, you know what I'm talking about it. If the trading opportunity is moderate, there's a decent opportunity. For example, something like Nifty, it is like 100, 120 points of opportunity. You want to capitalize those opportunity. So how I will be trying to capitalize this, more or less I will be consider using in the money options. So why in the money options? Because lesser time decay will be there. And of course, if the opportunity is very small, I will try to capitalize in credit spreads. Opportunity is very small. It looks like small. Sometimes it could become moderate also. So we really don't know whether the opportunity is small or moderate. So it is small to moderate is what I consider. So more the time, if it is eroding, more the money is there. So that is why it's a conservative game. So if it's a conservative game, always one can achieve using credit spreads. Means it's more of an option selling. Once in a while, one can go and practice option selling also. So mostly failed auction can be attempted directionally. And there are certain places you may have to be and you may have to turn yourself into an option seller and try to play with credit spreads. If you know that it's going to be an intraday opportunity, then credit spreads are not affected. Go and buy the option directly. You can buy a naked option. It could be an at the money option or in the money option or out of money option. If it is intraday, it doesn't matter whether it is whatever it is. But in the money options will always have the biggest advantage most of the time in terms of points. If you're looking in terms of points, it will be in the money options. Or if you are looking in terms of risk reward opportunity, then OTM options are the one from an intraday perspective I'm talking about it. All right. OTM options will have high risk reward opportunity from an intraday perspective. But in terms of number of points, in the money options or hedged futures will have the maximum money in terms of money. It'll be making more of it. So what is the win rate of failed auction? We talked about that, but generally failed auction, I prefer to practice only in Nifty and Bank Nifty, or mostly in indices, currencies, those kind of generic indices, commonly used, mostly trading. So win rate in index futures will be traditionally I've been trading. So on a regularly we've been monitoring failed auction for the last 10 years, as I said. I don't think last 10 years, but I am sure like at least last 6-7 years, because I think failed auction itself coined after 2010 or 12, somewhere around that time only. So I don't trade a failed auction in stocks particularly, because win rate is more or less 50-50, and sometimes it is riskier also. So if you are trading failed auction, don't trade only failed auction alone. Try to conclude with the overall context. Failed auction alone, it is not a context. Even when I am using market profile concepts, I don't use failed auction alone. If there is additional supporting context are there, I also include those additional context as well. So the surrounding context in market profile is always important. Failed auction is one of the dimension that we are looking into that. So more than that, failed auction plus supporting context will increase your win rate. So that is why I'm talking about the screen time, which is more important for a trader. So better screen time, your winning rates also improving. So you can boost your winning rate to 75% to 85, 90%, you can boost it up. Right, which is very much essential for our professional traders. So before ending the session, we'll have a quick discussion around Nifty and Bank Nifty, because something very, very interestingly happening. At a higher time frame perspective, what is happening here is last Friday, weaker hand shorts got taken out. Why I'm saying is like I was part of the weaker hand last Friday. My shorts also I had to force to cover at the opening itself. I covered at the open, but later on I re-entered. Right, so though I was part of the weaker hand, price opens with a huge gap up. I'll tell you what was my view last Friday, what I was thinking. So I'll go to Slack. Slack is our own private community. So I'll go back over here. Say like this is my thinking as on last Friday. So looks like a big gap up will be going neutral, means I was holding already some shorts and I'm gonna, in terms of options only. I'll be closing at the open because I don't run any naked futures. One thing which I don't practice is like these days, I don't run any naked futures. Most of my strategies are hedged or naked options. At times, I'll also involve in credit spreads also. So looks like a big gap up is going to happen at the open and not going long. I'm not interested in going long. That's what I'm very clearly said. So we'll look for re-entry of shorts if it is required. Maybe if the day low breaks, I will try to re-enter shorts again. As the daily sentiment maintains negative, and if the A period low breaks, then I'll go for a G2 low odds. So the G2 low, one of the very important low formed on last Friday. So since the gap up is big, the letter A period low is important reference to monitor confidence. However, the day low breaks, so I have to re-enter into my shorts again. I got into positional shorts because of the G2 low odds. So if you could see the last Friday session, I'll show you the last Friday session in Nifty. So this is the last Friday session. We have the G2 low. So this is something like, again, a memory has been left in the markets. Some poor low memory is there. G2 low, some sort of memory is there. Right? So the markets are keep on leaving those memories. Now, so what is the important thing here is like at the closing note. So this is what I'm just thinking about the closing notes. I think G2 low is there. This is around 255. So Monday sentiment matters in enough. As of now, I'm not having access to the market profile chart, but only price charts from mobile. So I was outside. So my car got broken down. So I have to go to the service center and then get it fixed. So unable to see any micro nuances. So I mean, I don't have access to market profile chart. So I'm not able to see some tiny informations. But enough and Bank Nifty cleared most of the micro nuances. One level in Nifty is pending at 17,700, but which as of now, I'm not giving too much importance to that. But Bank Nifty, it has a very serious micro nuances. One of the micro nuances in Bank Nifty is like, I think very way down. So this week, it's going to be a very interesting week. So this week, I'm just thinking that there's a small micro nuances at the 3,800. That is called as an early morning weaker references around, we are having at the 30th September is what we are having. This, I'm expecting one touch towards the level downwards towards 38,000 levels. In this series, I'm expecting that. That's something which is like another 1,500 points away from the current levels. Most likely, we are hardly having how many days for this expiry? I think another 5 days in the next week. And then Diwali week, we are hardly going to have another 2, maybe and another 1 more day of mover trading. So less than 7 days is what we are having for this expiry. I'm expecting one touch towards 38,000 in Bank Nifty because of that micro nuances. As I said, market do have memory. That is one important memory point. But I've been tracking this. And I think it's the right time to short Bank Nifty. I mean, this is not a complete structure though, because this is not the profile on 14th October is not completed yet. I still haven't connected with the data at all. But when it comes to Nifty, I'm expecting price to go back and touch the G2 low, most likely in next 2 days. Means maybe on Monday also it's possible. I'm mostly expecting this RBI policy announcement. Last week itself, I anticipated, but it haven't happened. So that is why I have to give up my shorts on Friday, and then I re-entered my shorts, means in terms of PEs. So the RBI policy low is one of the most important reference I'm expecting to be broken down by next week. Not only that, I'm expecting a bare minimum of price movement towards 16,500 by the next week itself. And markets also, right, the US market last Friday ended weaker. See, that is not the very important thing. The structurally markets are going down. I think the next week is expecting 16,500 is a reasonable thing. I think if at all any price action is, any gap down is going to likely to experience on Monday opening. So Monday opening, the more prices sustaining down below 17,200 levels, the odds are likely to be higher on the downside towards 16,750 levels, primarily towards 16, almost around 16,900, and then towards 16,750, and finally towards the 16,500 is the reference I'm expecting. These two are possible, but if they are going to take out the RBI policy low, right, which is what in the October series, a very important low had happened last, the October month itself. Not in the October month, I think in the previous September end, 30th of September, it got the low. So this low is a very, very critical low. If this low is breaking down, then I think the downward acceleration is going to get faster. So I don't know how much down we could move, but I try to keep my expectation limited. Bare minimum, I'm expecting 16,500. If in case Monday, we're going to start with a gap down day. All right, so that's the view here. I'm sure you might be having a lot of questions. Let me take a couple of questions here before closing the session. Sunil is asking, can I get the recording? Of course, the recording will be automatically available by end of the day. I think another 1 or 2 hours from here, automatically the recording will be automatically posted. Which sector will be defensive? So it depends. Sometimes it could be FMCG, sometimes it could be pharma. So it depends every time, right? So generally, I don't look into those perspectives. Anyways, so I'm closing the session a little early here. So see you next time. Thank you once again for coming by, attending your, and thanks for giving your wonderful time and joining along with us. Thank you.